welcome to Finextra. I'm Josie Waite and I'm here at EBAday 2018 in Munich, and joining me now is Munne from equensWorldline, and we're discussing instant payments, rip and replace. Mark, thank you very much for joining me. I hope you're enjoying the event so far.
Yes, I am. It's a very interesting event with lots of quality speakers. Yep.
Instant payments have been on top of the agenda for a lot of banks in Europe, but we also see initiatives in other parts of the world. What are your views on this? Do you see similarities and also differences?
Well, we are all aware of what's happening here in Europe, and we've seen some very big initiatives across the globe, in the US, in Canada, in Australia, in Asia, and we see this common understanding of instant payments emerging with a pre-funded settlement model and ISO 20022 as the underlying message stack. What's interesting is that we recently also see interest from smaller communities in instant payments. And by small, I mean countries with a million people and less. But they have a slightly different approach than the bigger communities. In the bigger communities, instant payments, at least initially, gets introduced next to the existing payment rails, while the smaller communities, they don't have that luxury. They don't have the option of running multiple payment rails in parallel. So they tend to do a rip and replace kind of strategy, where they fully move their entire payments portfolio from their batch system onto an instant payment rails. And that means single credit transfers, batches, online payments, and also direct debits. And this is where we see request for payment coming in.
Request for payment is a very interesting development, which we have seen in implementations across the globe, but not just in SEPA. What are your views on this?
I personally think request for payment is a very positive development. It has benefits for the consumers, it has benefits for the corporates. So when you do a request for payment, when a corporate wants to do a request for payment, they send in a pre-filled payment request, which ends up in your internet banking or your mobile banking. And because it's pre-filled, I can't make typos in the account number or in the payment ID. If I agree, I just have to authorize that payment request, and that then initiates an instant payment. From a corporate side, that means an irrevocable payment, and because all the information is pre-filled, the reconciliation on their end is seamless. From a consumer perspective, I don't need to type in 35 positioned alphanumeric fields to do that payment. I just have to authorize that, and I'm back in control. I decide which payment gets executed when. And that consumer control, that customer control, that's actually very important to regulators and central banks, which is why we're implementing request for pay for one of the smaller communities.
We have seen in Europe that moving towards instant payments is very challenging and comes with massive investments. How do you see the smaller communities keeping up?
Well, as I said, they kind of do a rip and replace instead of operating multiple infrastructures in parallel, which of course helps in maintenance and support of your payment rails. On the second hand, we also see they're using EPC-inspired rulebooks. They're using ISO 20022 as the message layer, which is of course standardized, which helps make the implementation as efficient as possible. And on the benefit side, as I said, request for pay and ISO 20022 help in the reconciliation at the corporate side, which means that less manual work for them. And no chargebacks, no refunds, because it's an irrevocable payment. So yeah, it's an investment, but it's an investment in the future. And because we're running this on our shared infrastructure, they of course have the benefit of our scale.
Mark, it's been great speaking with you. Thank you very much.
You're very welcome.
And thank you for watching.